who are either tuning in live or watching this recording for the Australian End of Financial Year webinar. My name's Ben and I'll be taking you through this session. I'll explain in a moment, but we sort of break it up a little bit so you don't need to stay for the whole thing. If you've sort of really used to the STP End of Financial Year reporting process, then we'll let you go early. But if you want a refresher or you're new to STP reporting, then certainly stay till the end and we'll cover that in more detail. So just as usual in these presentations, we are providing just sort of general information, and we're not your legal or accounting advisors. And so if there are questions of a legal or tax advice nature, just direct them to your advisors or the Australian Taxation Office. And we are now using Microsoft Teams as we have for maybe the last 18 months or so. It's a different platform for our webinars, and it is a little bit different in terms of asking questions, but we have had quite a number of questions in the registration process, and we addressed most, if not all of those throughout the session. There was one very existentialist question, and we can't tell you if there is a God, so apologies to that person who asked that question. But we've certainly addressed most other questions during this session. And if you do want to send through a question as we're going through the session, then you can do so in the Q&A process there. Please use your email address, and that just means if we don't get a chance to get to your question during the session, we will email you later with an answer. And some of you who ask some fairly specific questions during the registration process, we'll get back to you one-on-one as well. But certainly the frequently asked questions, we cover those during the course of this webinar. And if you are watching this recording, you can go onto the Sybiz website and submit any questions that come to mind, and we'll get back to you on those. Again, if they're of a specific sort of legal or accounting advice nature, we can't help you with that, but certainly if it's something to do with using the software from a end of financial year process, then yeah, we'll have a look at those for you and either give you the information or direct you to your business partner if it is something more in depth. So our flow today, we're going to start with Sybiz Vision, and there's quite a few of you that have registered who are going through your first end of financial year process with Sybiz Vision, or the new version of Sybiz Vision. So for the new customers new to Sybiz, it's all going to be new, but for those that have upgraded from Classic in the last 12 months or so, it's a slightly different process and a lot simpler. So it's a very quick set of slides on the end of financial year process in Sybiz Vision. From a Sybiz Visipay point of view, it's going to go into some more detail. So we'll talk at a high level about the end of financial year process, just as a bit of a refresher, go into some general updates about some of the things that are changing, talk a little bit about STP Phase 2, and I should just say off the bat that we are going to be seeking a deferral when that process opens up on the 1st of July, and I'll talk more about why we are seeking a deferral on that when we get to that point. And then if you do want to hang around and get a bit of a refresher, or you're doing your first end of financial year reporting either in Visipay or through STP, then we're going to go into a bit deeper dive of the end of financial year process under STP reporting in Sybiz Visipay. So if you're just here for Sybiz Vision, feel free to tune out as soon as we finish that section. If you're really au fait with the STP reporting process for end of financial year, again, you jump off before we get into that detail toward the end of the session. So that's how we're going to be running it today. And just before we dive into the end of financial year presentation, just while we've got you, we have been developing and releasing a bunch of apps for both the iPhone and Android platforms in recent times. So we have a sales app that allows you to do sales quotes and sales orders, a purchases app that allows you to do purchase requisitions and purchase orders, a stock app which allows you to do stock takes and sales picks, and a totally new Sybiz leave replacement app called ESS, and that gives you some additional functionality over and above the old version of the application, most notably the access to 12 months worth of pay slips direct on your device. So it's just to make you aware of those in case you hadn't seen our communication about them, but certainly you can follow that through with your business partners if any of those apps tickle your fancy. Okay, let's have a look at the Sybiz Vision process. So it doesn't really matter what accounting package you use or ERP package you use. It's a good idea to reconcile on at least a monthly basis. And before you end your financial year, you want to make sure your data entry is complete as possible. Sometimes that's out of your control with suppliers sending invoices a little later than you would hope. And we recommend using report sets in Sybiz Vision. So different businesses are using different aspects of Sybiz Vision. So there's no, I guess, one size fits all report set that we could say, okay, you've got to have all of these reports, but certainly your basic financial reports, your trial balance, balance sheet, profit loss, maybe a comparative profit and loss, reconciliation report, debtors and creditors age balance lists, quantity and value report for stock, fixed assets, etc. You can put all of those into a single report set and just click one button and it'll run all of those reports. And essentially, if you, when reviewing those reports, if you've got adjustments to make and you want to run those reports again, instead of running each of them individually, you can just run the report set. So there's some good information in the help file if you've not yet explored report sets. You can set them up. You can have a bunch of reports for a monthly basis and some on an annual basis. You can have different sets of reports of different people within the organisation, and yeah, definitely a time-saving device there, especially if you do make those adjustments, as I said, and you want to rerun those reports. It's always a good idea to quarantine a backup as well before you start a new financial year. Just yeah, backups are obviously vitally important, especially in these days of cyber attacks becoming more and more prevalent. And yeah, it's a good idea to make sure that those backups are retained and kept safely. And if you do need any assistance specifically with the end of year process, your Sybiz business partner can assist there as well. So for those that have come from Sybiz Vision Classic, you'll be pleased to know that there is no formal rollover process. It's just simply a matter of creating a new financial year. And that can be done at any time. You can still transact in the current financial year, even if you create a new financial year now. So if you wanted to get your budgets into the system for the new financial year, even though it's only the 11th of June, you can create the new financial year and that'll be all set, ready to go for you. So it's just a matter of clicking on utilities and create new financial year. Now, behind the scenes, there's very little that happens compared to Sybiz Vision Classic, where they're all sort of data was moving all around the place. There were recalculations going on. You want to be doing a re-index before you rolled in Sybiz Vision Classic. That's not the case in this version of Vision. It's a very simple process, both at the front end and behind the scenes, and it's a lot easier to do. Now, what will happen when you go to create that new financial year is you'll most likely get a warning saying that users can still process in the earliest financial year. So you have up to you have up to 3 years that you can process in Sybiz Vision. Of course, if you've been using it for longer than that, you still retain all the information from those previous financial years. But once you create the next financial year, you essentially lose the ability to process in the earliest financial year that's in your system. So that's why you get that warning. And hopefully most people in this case would have finished their processing the 2018-19 financial year. And so it's safe then to create the 2021-22 financial year. Now, when you okay that process, you'll then get the edit periods dialog come up, and then you can start sort of allocating rights to different roles as to who can actually process in that period. So if you are going to jump the gun and start that new financial year now so you can get your budgets in, for example, then you probably don't want to have anyone allowed to process in the new financial year at this point in time. But this is where you control it. So for those that are new to Sybiz Vision, you've got some really good control here where you can say, okay, well, we don't want the accounts payable people to be processing in the new financial year because they've got to concentrate on finishing the previous financial year, but other people in different roles can be allowed to process in that new period. And really, that's it as far as Sybiz Vision is concerned. It is really that simple, and it's a lot different process. I know that those who have come from Sybiz Vision Classic, it was always a source of fear and trepidation about whether things would sort of come out in the wash as they needed to, but certainly with the new version, there's nothing really to worry about in terms of that process. So if it is just Sybiz Vision that you've come to join this session for, feel free to go about your day. But if you're wanting to get into the Visipay side of things, stay tuned. So this comes up quite a bit about, what version should we be on for the end of financial year. We have always recommended that you're on the latest version for the end of financial year, and the latest version at present is 2102. There is no version that's going to be released before the end of June, and we will have one July, August, and then of course the major release later on in the year as well, where we'll start seeing some of the STP2 functionality coming in. But just a word of caution, if you are on a version less than 19, you might get some issues in fringe cases, so some fairly obscure combinations that might lead you into some trouble with STP reporting. So certainly, as long as you're on version 19 or above, there should be nothing really to worry about in terms of your end of financial year reporting. But again, just emphasising that we do recommend that you maintain the latest version at all times. So that's just our general rule. The process overview is very similar to Vision in terms of, again, we recommend that you reconcile on a monthly basis. And again, use report sets, make adjustments, rerun your reports, do your backups, etc. And from an employee reporting point of view, the thing that we'll need you to do from an STP point of view is to process your employment income statements. Now, we will go into a deeper dive of that a little bit later. Those employment income statements can also be referred to as providing the final event indicator to the ATO, which not too keen on that terminology, but that's just the lingo that we have under single touch payroll. And of course, you need to roll the year in prior to the next pay run, and there's a little bit of housekeeping that we'll need to do once the financial year is rolled into the new year. And again, if you do require assistance specifically, then you can engage your Sybiz business partner. A few things that are changing, or rather not changing in some cases as well. The tax scales, they last changed in October 2020, and they are remaining the same for the 2021-22 financial year. So you may have heard of the extension of the low and middle income tax offsets. That's something that you worry about when you do your tax return, so it's not something that impacts on your tax scales. But the STSL, which I always forget what that stands for, but it's the Student and Training Supplement Loan Scheme or something along those lines. Apologies for not remembering that off the top of my head, but yeah, it's essentially the roll up of the HECS/HELP/SFSS schemes, and those rates are changing. So you will get your notification later on in the month when those rates are ready for downloading, and they will come through and be applied when you roll the financial year. So just a heads up on that. And the superannuation rate is increasing for the first time since I think 2014, so it's going from 9.5 to 10%. Now, one thing that we just want to point out is that this does require a manual edit of staff types, because there are some employers there that are paying beyond that ESG rate already. So we don't know whether they've gone to 10% in anticipation that they're always going to keep 0.5% in front, or whether they want to keep 1% in front, or what they're trying to achieve there, or whether they've just gone, okay, we've gone to 10% early, but we want to maintain 10% and just sort of keep up with the gradual increases over the next few years. So that's why we don't just go in and arbitrarily change it all to 10%, because that's in some cases not what the employers actually want to do. Of course, it needs to be at least 10%, and we'll run you through how to change that in just a moment, because it has been quite some time since we've had to worry about that. Another thing just to give you a heads up on as well, with the whole superstream regime these days and superannuation clearinghouses, there's a time difference between the clearinghouses receiving your money and it getting into the allocated accounts at the superannuation funds. And so we just recommend that you should allow at least a week before the 30th of June to process your super contributions if you want them to hit your employees' accounts prior to the 30th of June. So that's just a heads up there. I think it caught a few people out last year just with the timing of the weekends, so they processed contributions on a Thursday, and it wasn't in the employees' accounts by the 30th of June, which I believe fell on a weekend last year. Okay, how to change your super rates, and there's just a few things to talk to on this screen as well. So this is each of your staff types is where the superannuation rate is housed, and so you just need to go in and edit each of those staff types, change it 9.5 to 10%, or keep it on 10% if that's what you want to do, so on and so forth, depending on how you're treating a super at this point in time. The next thing I'll talk to is just what we call the casual super monthly gross. Casual is a bit of a misnomer. It's just it's a threshold that the budget that's just been announced wants to do away with this $450 amount. Basically say if you're getting paid, you're getting super, irrespective of if you earn less than 450. Now that is not in legislation at this point in time, and it's unlikely to be in legislation by the 30th of June, and therefore the government advice is that it's most likely going to come into play that 450 is done away with from the 1st of July 2022. So don't worry too much about that at this point in time. And the other thing to point out as well is that if you are using the quarterly thresholds for the superannuation contribution base, that is another thing that requires a manual change each year. So you do this once you've rolled the financial year and before you process pays. From a JobKeeper and JobMaker point of view, those are obviously things that have been processable through Sybiz Visipay, and there's nothing special required for end of financial year for either of those schemes. So if you were involved in JobKeeper at all, there's nothing you really need to worry about. This is the, I guess, second financial year end incorporating JobKeeper. So it's just pointing out that there's nothing special that you need to do from an STP reporting point of view. And similarly with JobMaker, it's probably not worth talking too much about that because the uptake has been quite low. The last figures I saw from around March was there'd only been about 400 people employed on that scheme. So it's certainly not what the government hoped it would be. But if you are one of those few employers taking advantage of it and you want some more information and about how to process in Sybiz Visipay regarding the JobMaker scheme, then you can go to sybiz.com/JobMaker and get some info there. Now, we have seen in recent weeks as well the announcement by the federal government of the temporary COVID disaster payment. So that is something that people in financial distress in the state of Victoria, or rather more specifically in Greater Melbourne, had access to in recent times. It's now been withdrawn, but it's something that may or may not come up again if different regions of Australia go into lockdown. But I guess the point to make here is that unlike some of the other COVID-related schemes that relate to people's employment, the temporary COVID disaster payment doesn't involve payroll processing at all, so there's nothing to worry about from an employer's perspective. From a payroll processing point of view, it is a direct government to individual payment. So I just wanted to sort of point that out. Hopefully we never need to use that again, but that's how that all works. So STP2, this is probably one of the big ticket items as to why you've come along. The ATO is about to give you some more information as employers. It is something where we're not 100% happy with the messaging that's been coming out, because it's basically saying, oh, nothing much is changing. And certainly from a reporting process point of view, the actual process that you go through when you do your STP reporting, that will be virtually indistinguishable from what it is now. So the ATO are correct in setting that expectation. Some of the other benefits as well is that it eliminates other reporting, so there'll be no need to have a separate TFN declaration process. So the additional information that would normally be captured for a TFN declaration, that's going to be sort of captured in your Visipay database, and it's going to be reported each and every pay. So we won't have to do TFN declarations anymore. Similarly, the employment separation certificates, which are available upon request when someone leaves your employment at the moment, it's a form for Services Australia. The information that is additional to what is currently held in payroll systems, that's also going to be captured within Sybiz Visipay and reported through STP Phase 2. And the other thing that is optional, but Sybiz is going to be incorporating it as well, is the child support reporting, and that again will eliminate the need for separate reporting of those amounts. And I think from memory that's going to benefit around 120,000 employers in Australia. So that's why we've decided to not treat it as optional, and we'll incorporate that as part of our STP2 rollout as well. And another benefit, not so much for employers directly, but certainly for the ATO and software developers, is that the data structure underneath the hood has been completely overhauled, so it's more flexible for future expansion. And that means that there'd be less likely or less frequency of, say, an STP3, STP4, etc. We'll be able to use that structure to expand the reporting, and I think it's safe to say that we'll see more and more bits of information reported through the STP process as other government stakeholders come into the ATO and say that they want different information for different purposes. A few things to be mindful of as well under STP2. So these are things to start sort of planning for. There is going to need to be some pretty significant work in some cases to get your databases ready with pay items and reviewing employee information to be ready to report under STP2. So this is one of the reasons why we want to take our time and give you time to do your homework and get things ready for STP2 reporting. So one of the buzzwords, it's a horrible phrase again, but disaggregation of gross. So all that means is that at the moment you're basically saying the gross earnings are a single figure, and then you're treating allowances separately under normal STP1 reporting. But under STP2, you're going to be providing a lot more information as to the breakdown of those gross earnings, and there'll be more information coming out regarding that as to the kind of pay items that you'll need to set up. So the reason you'll probably need to set up new pay items is that currently you may have pay items that you can use for different purposes, so a classic example is if someone cashes out some annual leave, if they're permitted to do so, versus someone who takes or gets paid out their annual leave upon termination. You could be using the same pay item at the moment for both of those purposes, but going forward it's going to need to be separate pay items, because those kind of things are going to be reported separately under the disaggregation of gross. And so you will need a significant review of your pay items, and we will provide the guidance on that as to how to get that all set up going forward. And as I said, the ATO will be giving some more information to employers in coming days, and there's some good information on their website as well that talks to more detail about these kind of things. There's also going to be more scrutiny of your pay-to-pay changes in your year-to-date amounts. So what that's going to translate to is that up until now, if you'd sort of missed a submission for whatever reason, that wasn't really the end of the world because you're reporting year-to-date amounts. But the ATO, or more so Services Australia, they're going to be more keen about seeing what's going on from a pay-to-pay point of view, and therefore it's going to be critical to make sure that you get a lot more formalised with your reporting to make sure that it's done on time every time. And yeah, expect that there will be penalties if that's not the case. And all salary sacrifice is going to be reportable. So at the moment, things like say exempt benefits. So if your salary sacrifice for a eligible portable electronic device, that's something that the ATO wouldn't actually know at this point in time, but under STP2, that kind of stuff is now going to be reportable as well. And there's a few other little bits and pieces of information that's going to need to be captured and reported at the employee level, and that's mainly to facilitate the TFN declaration and employment separation certificate information that's required. There's not heck of a lot there, but some of it is quite technical, where there is a very very complex set of what they're calling tax treatment rules that need to be applied to each employee, and we'll have a wizard style process that will help you build up those tax treatments. But again, it's going to require a little bit of effort to get that set up in your system, and so again, there is a bit of work for you to do, but nothing for you to worry about at this point in time. So as I said, you're about to get some more information from the ATO. We won't go into detail here because the ATO have asked us as software developers to defer you to their website. You can Google it now if you want. They've updated the information that they're going to be referring you to when they write to you, so you can get a sneak peek of that and Google that now. So just yeah, if you type in ATO STP Phase 2, it'll take you to the page I'm talking about. And the official start date is still the 1st of January 2022, and there's going to probably be a lack of care in some of the reporting in the media and some of the government speeches, etc., where it is probably going to be talking about mandatory start date of the 1st of January 2022, without setting the expectation that there is the possibility of deferrals, and on that we will be seeking a deferral until at least the 1st of July 2022. There's a number of reasons for that, and I should just mention as well that Sybiz is usually first to the game with these kind of things. We were ready for SuperStream about 2 years before the ATO were, even though we worked to the original deadline. Similarly with STP1, we were there from day dot. We didn't have a deferral. And a number of other similar initiatives in other jurisdictions, we've been really among the first to be ready. But on this occasion, for everyone's benefit, we've decided that we will be seeking a deferral, and there's a few reasons for that. 1st of January is a crap time of year, pardon the French, for these kind of changes to be brought in. You know, there's skeleton staff on board, and there are going to be some bumps in the road without a doubt. And we just think it's a stupid time of year, as we saw with the working holiday makers, to be doing something like this. And a lot of businesses at that time of year, perhaps your own business, there's someone else that sort of takes over payroll processing while people are on leave. And so again, it's someone who's maybe not familiar with payroll processing and the process, and it'd be stupid again to have them faced with this significant change when they're not the person that normally processes pays. There is, as you should have gleaned from the previous slide, there is going to be a significant data review and expansion process required. So that's going to take a little bit of time, and we'd rather not sort of inflict that on you to do in a very short space of time, and we'd rather give you more time to get that right and to guide you through that process. Yeah, so that's, I guess, some of the reasons we're seeking the deferral. We also use, as most of you are aware, the SuperChoice service for communicating the STP data to the ATO. And so that's just another cog in the wheel that we just want to make sure that that end-to-end process is all ready to rock by the time the 1st of July comes around. So the deferral process for Sybiz and our and other software developers doesn't actually, we're not able to apply for that until the 1st of July this year. So I'm quite confident that because we don't have a history of applying for deferrals, that we should be able to get this one granted, but it's not it's not something that we can 100% guarantee, but we will communicate with you, of course. And what that means for you as employers is that because you're a Sybiz Visipay customer, you will basically coattail our deferral, so you won't need to go through your own process there. So again, there may be some careless information coming out from the likes of accounting firms and the media that could cause some confusion, but yeah, certainly the only other point I'll make on that is that if you want to defer your STP2 process even further, so let's just assume that Sybiz is granted a deferral and it is to the 1st of July 2022, but you want until the 1st of October 2022, then in that case you would need to apply for your own deferral. So that's just a few things about that as well. So From an STP reporting point of view, if you have already done a few or two, or yeah, I guess if it is possible that you could have done your third financial year already if you pay very early in the month. If you've already familiar with the process and don't want to hang around, by all means, you can leave us now. But if you do want to hang around and get either a refamiliarization or some information for the first time on the STP reporting process, stay tuned. Okay, so what we need to do is we need to do what's called the finalization declaration or the final event indicators, or something that we specialized into the employee income statement, which we'll have a look at that process in just a moment. So the reason we don't like the terminology is final sort of indicates that, okay, maybe these people are no longer employed, but the final is in the context of this is the finalization of the financial year, not the finalization of people's employment. And essentially what it does is it lets the ATO know that you've finalised those employee records for the financial year. So you do need to do that by the 14th of July. So for smaller employers last year, I think they had until the 21st or the 28th of July. Larger employers were the 14th of July, but now it's been brought back to the 14th of July for everyone. And certainly having a look at, especially last year, there was a significant number of final submissions received on or before the 1st of July. Somewhere in the order of 80% of STP reporting had been finalised on or before the 1st of July. It was really quite significant. And we expect that to be the same again this year as people get more and more used to the process. If you jump the gun and you send your final event indicators to the ATO and you realise that that was not the right thing to do, you can do an update event to remove that final event indicator, and that'll just give you the time to go through and do whatever you need to do to get your data ready, and then resubmit your final event indicators to the ATO. From a STP reconciliation process, there is a new STP reconciliation report that off the top of my head came out in version 21. I may not be 100% correct on that, but essentially it is in the latest version. So that wasn't available last financial year, and it just gives you the finer level of detail under STP1 reporting. It's going to be an absolute mammoth report under STP2 reporting, but yeah, just letting you know that that report is there available now. It is essentially just reflecting the same information that has been reported, so it is more a security blanket rather than a true reconciliation process. But if you wanted to sort of see the data as it sort of has been reported to the ATO, then that's the report for you. And one thing that did cause a bit of confusion for some customers previously is that pay periods that span the end of financial year, they are to be reported in the year in which they are paid. So that's always been the rule, but under the payment summary annual report process, there were no sort of checks and balances for that. But under STP reporting, because we are reporting on a pay-by-pay basis, I just wanted to clarify that particular rule there. And your reportable fringe benefits, including the 57A and your reportable employer super contributions, that's handled the same way under STP. So that can either be handled through an edit to the employee's record or through payroll processing. So that's exactly the same as it is under the payment summary reporting process. So as I said, we have something called the employment income statement to do your final event indicator process, and that's just what we call a specialized STP update event that Sybiz has created to just make your life easier. And it's just a matter of choosing that from the event type dropdown. So most of the STP reporting you would do is just pay events. Occasionally you do an update event, and even less occasionally a zero update event, but once a year we do the employment income statement. So you can just do an update event and tick everyone's final event indicator yourself if that's what you want to do, but if you want to automate it, then this is the one to use. It is the path of least resistance, and you do have the ability to do that in the current year, so prior to rolling, or you can do it in the as a prior year report after rolling into the new financial year. But just a word on that though, if you are going to be doing it, if you need to sort of roll your payroll database before the 30th of June, and you therefore want to do your STP reporting as a prior financial year report, wait until after the 30th of June to do that. You may encounter an error message depending on what version you're on. And again, just a reminder that the message count that the STP fees relate to, we don't count the end of financial year reporting through those message counts, so don't worry too much about that. And again, just emphasising that your reporting must be done before the 14th of July. If you don't do it, you then need to go back to the old payment summary and a report process and file the EMP-DUP. Yeah, so that's just a word of warning there. But the ATO did report to us that the level of compliance of employers doing their final reporting under STP last year was way in excess of expectations. So that just shows that it's a relatively simple process, and the vast majority are getting that process right. So from an employee perspective, again, it just may pay to give people a reminder. We have some information on our website. If you go to sybiz.com/mystp, MYSTP, there's a flyer that you can print out and hand out to your staff if you are new to STP reporting. And yeah, essentially when your employees log into MyGov, then if they go to view my income statements, they will see the summary information of those income statements, and there's a status indicator. So year to date, that indicates that it's pre-30th of June. Not tax ready means the financial year has ended, so it's the 1st of July or beyond, but the final event indicator has not yet been received. And then tax ready is either the financial year has ended and the final event indicator has been received, or what we saw last year was that if the final event indicator had been received prior to the 30th of June, it still said tax ready at that point in time. Yeah, so that was just a little change on previous messaging. And your employees are able to lodge their tax returns prior to the tax ready status, but as they go through the tax return process, they'll be needing to confirm amounts and be warned that they haven't been finalised. So the other point to note is that your employees may be expecting payment summaries, and some of them probably still call them group certificates. So that's definitely a hard habit to break, and there's nothing stopping you from providing payment summaries to your employees. And certainly if you are using the ESS website, the payment summaries that are generated once you roll the financial year will be available to your employees through that platform. So a few of the gotchas, these haven't necessarily gone away with any changes at the ATO level, but just some of the things that mechanically can happen within STP reporting, just to make you aware of. If you change employee numbers, we've now got warnings in Visipay that to make a change, you need to invoke an ellipsis to deliberately make that change, and then there's some tooltips as well that warn you against doing that. But if you really want to change an employee's employee number, then you can do so. But yeah, there's some things to do which we'll talk about how to overcome that in just a moment as well. And the reason STP reporting doesn't handle that too well is that some employees may have more than one employee record, so like working holiday makers, for example, there. If you've changed your payroll system or database, then you may need to zero out the year-to-date data from the old system. Yeah, there's different, like the ATO would prefer that you don't take on year-to-date balances in your new system, that you just sort of essentially run two systems reporting for a financial year. But in reality, there's year-to-date information that you probably need in your new system for things like the quarterly superannuation thresholds and things of that nature as well. Working holiday makers, they may continue to work under another visa class, so that's where you would want a separate employee record. And I believe with the current situation with a lot of working holiday makers remaining in the country, that a lot of that has occurred where they have been granted different visas that allow them to continue employment. So unfortunately, with the data duplication that comes about, if you do say change an employee's number, that's not something that you will see from your employer perspective, but your employees will see that. So they'll see almost duplicate information if you did it. If you change your employee number prior to doing the final event indicator, they'd see 2 records with the same amounts for the financial year. And this is something where the ATO are pretty savvy now in deduplicating the data, but in some respects, it's hard for them to distinguish whether there is a genuine duplication of data or an inadvertent one. And so it's a good thing to do now if you have either changed your systems partway through the year, changed employee numbers while reporting under STP, or you've changed the employment type of a working holiday maker. You should get on top of those things now. And so to remedy a change in the employee number, what you'll need to do is change the employee number back to the original value. And I should just say this is a change within the current financial year. So if they had a different employee number 3 years ago and they've got one now that we changed 2 years ago, it doesn't really matter for this financial year. But if you've changed the employee number during this financial year, then change it back to the original value, perform a 0 update event for that employee. So that's just another specialized update event within your STP reporting, and then change the employee number back to the new value. There's no need to then do a further update event, because as far as the ATO is concerned, the information that you'd previously reported under the new number is still current. So it's just zeroing out the amounts under the old employee number that we need to do. If you've had a change in payroll systems or databases throughout the course of the year, just make sure that all employees exist in the new database. So that could be, for example, if you had an employee leave in September last year and you created a new database in January this year, you may not have included that employee. Similarly, if you've changed systems on a similar timeline there, but if you didn't zero out the previous information from your old database and you took up year-to-date information, then again, that's going to lead to a data duplication situation from the ATO's perspective. So what you can do, even if you don't have access to your old system, you will have access to the BMS ID, and that can be obtained from having a look at your submissions on the ATO business portal, or having a look, if you're an employee, at your MyGov record, and that will show you the BMS IDs of your income statements. And so all you'd need to do in Visipay database would just be to go to do a 0 update event, use the ellipsis button to change the BMS ID, which would allow you to do just for that submission. Then that way you can zero out all your employee year-to-date balances under the old BMS ID. And again, you don't need to do anything to re-report the new balances, because as far as the ATO is concerned, nothing has changed under your new BMS ID. So apologies again for the lingo there, but that is what the ATO have called these things. And finally, the working holiday maker that's transitioned to a different employment type. So the end goal is to create 2 new employee records. So one represents their working holiday maker capacity. And again, this is just if it's changed within the current financial year. And then the other record is when they've continued to work, but no longer as a working holiday maker. So the tax treatments are different for those 2 types of employment. That's why the ATO wants to see 2 separate records. And so it may require some corrective processing if you haven't previously split the record when they transition from no longer being a working holiday maker. But yeah, that's just a word of advice there. And onto the old payment summaries and MDUP reporting. You can still, as I mentioned earlier, give payment summaries to your employees. Hopefully there's less demand for that now that we're in our 3rd year of STP reporting. The MDUP does not need to be lodged unless you haven't done your final indicator reporting by the 14th of July. And we're not quite sure how long it's taking the ATO these days to tap employers on the shoulders to let them know that they haven't received the final event indicators. But we did around November last year. There were a couple employers that we heard about that were starting to get information from the ATO that they hadn't done them. So it does take some time. So it is something just to be on top of that process to avoid any adverse activity from the ATO. And Sybiz Visipay can be toggled between the payment summary annual report and STP reporting. So I'll show you how to do that in a moment. But just in terms of, obviously, if you've been reporting under the STP process, you'll be used to the ATO transfer buttons for that process. Those are the same buttons that are used for your payment summary reporting as well. But prior to being able to report payment summaries, you need to toggle the options in Sybiz Visipay under the tax details tab. The single touch payroll area there, you can toggle that on and off from being active. So if it's active, obviously you're reporting under single touch payroll, and if you take the active flag away, then that will generate the payment summaries if you so need to do so. So with that, we've pretty much gone to our 45 minutes, and there have been quite a few questions that have come through, but from what we can tell, some of the questions have asked stuff that we've covered a bit later on, and there's some very specific ones, so we won't actually take any live questions today, but if we haven't got back to you yet, stay tuned. We'll get an email through to you. If you are watching the recording and you've got a question, go to the Sybiz website, fill out the contact form, and we will get back to you on that. If we haven't responded, there are some people in the background giving live responses to questions at the moment. If we haven't got to yours, we will get to that if it hasn't been covered already. So with that, wish you all the best for the financial year ends, and you'll get some information on Sybiz's STP2 deferral status, hopefully fairly early on in the new financial year, but hopefully you understand our reasoning for requesting a deferral in these circumstances. And with that, I wish you all the best. Have a great weekend. Bye-bye.